welcome back to those of you who have been with us for the previous modules. We're happy to have you. And if this is your first time joining us, welcome. We're excited that you were able to take the time to engage with us around some financial grants management training. So again, thank you for joining us today. Today's training topic is internal controls for pass-through entities and subgrantees. Before we begin, we will provide instructions for Spanish translation and then hear a welcome message from FVPSA Director Shondell Dawson.
Hello, everyone. Today's event will be conducted in English with Spanish interpretation, and there is also ASL interpretation available. Anyone who is not Spanish-English bilingual will need to select the language channel. To listen to English on a computer, please locate the globe icon along the bottom row of your Zoom screen and select English. If you're joining via the Zoom app on a mobile device, click More or the three dots in the corner of your screen. Select Language Interpretation, choose English, and then click Done. Do not select Mute Original Audio. Hola, buenas tardes. El evento del día de hoy se llevará a cabo en inglés con interpretación en español. También hay interpretación en lengua de señas estadounidense. Quien no sea bilingüe en inglés y español tendrá que seleccionar canal de interpretación. Para escuchar el español en su computadora, haga clic en el icono del globo terráqueo en la parte inferior de la pantalla del Zoom y selecciona el idioma. Si se está conectando a través de la aplicación Zoom en un dispositivo móvil, haga clic en More, Más o en los tres puntos en la esquina de la pantalla, seleccione el Language Interpretation, que es interpretación del idioma, elige el idioma y haga clic en Done. No seleccione Mute Original Audio. Gracias. Thank you.
Good afternoon and welcome to the third FVPSA Financial Grants Management Training on Internal Controls. I am Shondell Dawson, Director of the Family Violence Prevention and Services Act program, housed here in the Department of Health and Human Services, Administration for Children and Families, Family and Youth Services Bureau, which resides on the ancestral land of the Anacostans. I am grateful that you all have made time to join us in this collective learning experience. We all know that federal funding is critical for the domestic violence and sexual assault services that are supported in each U.S. state and territory to meet the needs of millions of survivors and families every year. It is equally important to know all about the best practices, regulations, and rules related to the implementation, tracking, and reporting of federal grant funds. I am grateful you all made time to join us today, and I hope that you find this training to be informative and meaningful as you all move forward with continuing to do great things on behalf of domestic violence survivors and their children. Thank you so much for joining us this afternoon. I look forward to hearing how these trainings have contributed to the implementation of your grants, and I hope that you all enjoy this collective learning experience. Thank you and have a good day.
Hello, and welcome to Internal Controls for Pass-Through Entities and Subgrantees, the third in a series of trainings designed to support FVPSA grantees to effectively manage their federal awards and support survivors to the fullest extent that these funding opportunities allow. My name is Courtney Fisher. My pronouns are she and her, and I am a grants management subject matter expert working with FVPSA. I am coming to you today from Anacostan and Piscataway land. On March 11th, 2021, President Biden signed into law the American Rescue Plan Act of 2021, ARP, a $1.9 trillion economic stimulus bill designed to speed up America's recovery from the economic and health effects of the COVID-19 pandemic. Within ARPA is a historic investment which allows FVPSA grantees to expand their scope and reach in new and innovative ways to address the COVID-19 related needs of sexual assault and domestic violence survivors. This training series is designed to educate FVPSA grantees, including pass-through entities and subrecipients, about the internal controls that pass-through entities and subgrantees need to have for successful management of your FVPSA award. Now I'm going to hand it to my colleague Laura Kovach, who will provide us with webinar guidance and kick us off with a few polls. Suzanne Marcus, along with Laura, will take us through some knowledge checks and organizational reflections today throughout the trainings, where we have the opportunity to apply and reflect on what we've discussed.
All right, thanks, Courtney. Again, my name is Laura Kovach, and it's great to be with you today. I'm the Executive Special Projects Coordinator and Contractor with FVPSA, and my pronouns are she and her. I'm joining you from Fairfax, Virginia on Powhatan tribal lands. Closed captioning will be available during this training. To access closed captioning, click the closed caption button at the bottom of your screen and then click to show subtitles. We are recording this webinar and we'll post to our brand new FVPSA webpage within a few weeks. And we will also have this training session recorded in Spanish and uploaded to the FVPSA ARP Learning portal as well. Any resource or link we provide you in the chat during training today will also be emailed out to everyone, and we will send out the slides following this training. For those who might be having some unstable internet, try dialing the number located in your webinar information for higher quality. Due to the large number of participants today, you will be in listen-only mode. We will provide some other opportunities to engage throughout our time together, as Courtney mentioned, with polling and some reflective activities. We are asking you that you use the Q&A function to be able to ask your questions, not the chat that you have during training. So if you look down at the bottom of your screen, you'll see the Q&A option. That's where you can go in and be able to ask your questions. If there's any questions that we don't get to during our time together, we will include answers and responses in an FAQ that we will provide following this training. As Courtney mentioned, throughout this training, we will have knowledge checks and polling, 2-minute reflection activities to help you apply the information that you're learning to your agency or organization. Okay, so I know some of you are already doing this in the chat, but if you haven't had a chance to do this yet, please feel free to say hi and let us know where you're coming from. Good morning to to our West Coast folks, to our territories. We hope that we're excited to have you with us today. So go ahead and feel free to add where you're coming from, and then we'll go ahead and we'll jump into our first poll. So what is your role? In this work, often titles don't reflect the full range of responsibilities you take on, but please select what best describes your role by checking what best applies. So let me go ahead, and we've got a lot of polls today. So we'll get started with poll number 1. Okay, so FVPSA state administrators, financial officers, grant managers. Welcome to everyone. Got a great group today. Okay, I'm going to go ahead and end the poll. I'm going to share results. So financial officer, looks like financial officers and financial staff and grant managers are the majority of folks with us today, and FVPSA state administrators. Missing anybody else? We have other. So we have so many different titles in our work for sure. Okay, thank you so much. Okay, we're going to go to our second poll. What kind of organization are you representing? I'm going to go ahead and launch poll number 2. Okay, I'm going to go ahead and end the poll. I'm going to share the results. So state funding office, we've got coalitions here, culturally specific programs, sexual assault programs, DV and dual DVSA, tribal programs and tribal consortiums. Wonderful, thank you. Welcome to everybody. We have such a wonderful diversity of folks here today. Okay, so this is for the chat. We know it's been an exciting opportunity to be able to have these new resources to support staff and survivors who have been impacted in so many ways by the pandemic. We know this funding can also come with challenges, particularly around the financial aspects of managing these funds. And our goal is to partner with you to help address these challenges through responsive training and technical assistance. Please feel free to share in the chat any challenges that you might have had around developing internal controls that your agency and organization needs to best manage and subgrant your new FVPSA funds. So what kinds of challenges or anticipated challenges are coming up for you around internal controls? Feel free to go ahead and put that in the chat. So ensuring that providers meet the federal requirements, ability to spend the funds, just getting policies and procedures set up, I'm seeing in the chat, figuring out allowable costs. That has definitely been something we have seen across all 3 trainings. Allowable expenses, allowable costs, ability to spend funds. Yeah, thank you all for sharing. We hope that we'll be able to address some of those pieces with you today. This is where we definitely encourage you to use the Q&A function during training so that our friends and colleagues from the Office of Grants Management are here with us today, and from FVPSA, who are able to address and answer your questions. So please use the Q&A. Big shout out to OGM for joining us for all 3 modules. So we appreciate their assistance. Okay. So the goal of this training is to provide you with an overview of internal controls and how internal controls can help you pass through grantee, how you as a pass-through grantee and as a sub-grantee of pass-through funds. This training uses the Code of Federal Regulations in the CFR and the Government Accountability Office's Green Book as our foundation. In particular, we are using Title 45 of the CFR, which is the governing title for the U.S. Department of Health and Human Services, which is where FVPSA is housed. However, this training builds on the CFR to discuss best practices in the management of your award. The CFR is often the minimum requirement for pass-through grantees and sub-grantees. We are also going to discuss best practices in the management of your award and how to make internal controls work for you. If you are a small grantee and think that some of this sounds impossible, put your questions in the Q&A or consult with your independent auditor. We will try to provide as many modifications as we can, but always consult with your own financial and auditing team, as well as your federal program officer and grants management staff to find out the processes that work best for you and your circumstances. After completing this training module, you will be able to define the purpose and key elements of internal controls as defined by the 2 federally approved internal control frameworks. Define the different frameworks of internal controls across different types of organizations, and discuss how internal controls are used to achieve operations, reporting, and compliance objectives. And then finally, identify resources to help administering agencies and subgrantees to design, implement, and operate an effective internal control system. We will begin by talking through internal control, what internal controls are and what they are not. We will discuss how internal controls can be used to help you navigate the requirements of your FVPSA award. Next, we'll discuss the various elements of internal controls. Once you realize what internal controls are, it can feel overwhelming to look at your grant and your organization to figure out where you should have internal controls. Then we'll talk about how to apply these internal controls to your grant. You will have an opportunity to apply what we're discussing throughout this training with knowledge checks and a review of a case study that highlights a typical scenario a FVPSA ARP grantee may find themselves in. Lastly, we'll share resources and other tools FVPSA grantees can refer to when questions come up about your grant. We have shared this image throughout our training together. So many of you might be familiar with these acronyms now, but if you're not familiar, you can take a look at these acronyms. We will be using these throughout our training. And so it's important to be able to understand what all of these different acronyms are, and especially if you're working with sexual assault programs for the first time, we encourage you to take a look at the lower right-hand corner around sexual assault programs and SANE programs. So now I'm going to hand the training back over to Courtney, who will kick off the training with an overview of internal controls.
Thanks, Laura. Let's begin by discussing the definition and benefit of internal controls. Internal controls sounds bureaucratic, difficult, and overwhelming. But internal controls are actually there to help you and make your lives a little bit easier. Having internal controls ensures that all financial activity of an organization advances the purpose of that organization, whether that activity is program services, general and administrative support, or fundraising. Internal controls also ensures that all staff members that are responsible for financially related tasks have the training and expertise to exercise the skill and judgment required by their tasks. No one is in this alone. And finally, internal controls helps to safeguard your organization by ensuring that no person in the organization makes commitments for the organization beyond their level of authority and that there is more than one person involved in the completion of every financial transaction. Internal controls also helps the pass-through entity or the funder by limiting when any two or more closely related individuals are in a position of reviewing or authorizing each other's transactions. This is called an arm's length analysis. Internal controls make sure that organizations separate the accounting functions of the organizations from the person that authorizes and disperses the money. This helps to manage the risk within the organization for fraud, waste, and abuse, and safeguard financial and physical property of the organization. This is known as separation of duties. Separation of duties. Separation of duties means simply that there needs to be at least two sets of eyes on every financial and administrative transaction. Throughout this training, we are going to talk a lot about what separation of duties looks like in the common organization. So, what does the CFR require? The CFR is fairly broad in what is required. The CFR requires that a non-federal entity, which means states, pass-throughs, coalitions, and subgrantees, must establish and maintain effective internal control over the federal award, and that they must comply with the U.S. Constitution, federal statutes, regulations, and the terms and conditions of the federal awards. The CFR also requires that any administrator or pass-through entity of funds must evaluate and monitor a subgrantee for the compliance with statutes, regulations, and the terms and conditions of federal awards. This means that internal controls are important to subgrantees, but equally important to pass-through entities and administrators of funds. The CFR also requires that all entities, administrators, pass-through entities, states, and subgrantees take prompt action when instances of non-compliance are identified. This may mean that the entity has to report the non-compliance immediately, or it may mean that a monitoring agency has to review the non-compliance immediately. The CFR also requires that subgrantees and pass-through entities have sufficient internal controls in place to safeguard protected personally identifiable information, or PII, and other information the federal awarding agency or pass-through entity designates as sensitive. This applies to the systems that are in place to ensure that only the people that need to know information are provided with that information. The GAO Green Book is the other source that we mentioned earlier, and it is the standard of internal control for the federal government. We are dropping the link in the chat to the GAO Green Book. The Green Book is organized by 5 components of internal control, and it applies to staff at all organizational levels and to all of an entity's operations, reporting, and compliance objectives. Each of these components has principles, which would also be known as the requirements for each component, and each principle has characteristics or attributes that explain the principles in greater detail. There are 5 components of internal control. They are, first, the control environment, or what policies and procedures that the organization has in place to set the standard for internal controls for everyone who works there. Second is risk assessment, or what the organization does to constantly assess its own risk of fraud, waste, abuse, or even negligent error. The third, control activities, or what specifically the organization does to mitigate the number of and the extent of errors that are made. The fourth is information and communication, what the organization does to control information and communication within the organization and outside the organization. And the fifth is monitoring, what the organization does to ensure that the internal controls they've set in place are actually followed. Over the next couple of slides, we are going to discuss the component of the control environment as an example of how this framework is set up. A control environment is the foundation for all internal control systems in an organization, whether that organization is a state, a tribe, a territory, a pass-through entity, a coalition, or a subgrantee. It provides the discipline and structure to help an entity achieve its objectives. The control environment is made up of 5 principles. These 5 principles tell your organization or agency what should be included in the control environment. And remember, this is the GAO Green Book. This is what is required from every organization with a federal grant. The principles of the control environment are: Principle 1, the oversight body and management should demonstrate a commitment to integrity and ethical values. Principle 2, the oversight body should oversee the entity's internal control system. Principle 3, management should establish an organizational structure, assign responsibility, and delegate authority to achieve the entity's objectives. Principle 4, management should demonstrate a commitment to recruit, develop, and retain competent individuals. And Principle 5, management should evaluate performance and hold individuals accountable for their internal control responsibilities. Like I said earlier, each of these principles also has attributes. An attribute tells you what the principle should look like. Like we did above, we will review the first principle as an example. Principle 1 says that the oversight body and management should demonstrate a commitment to integrity and ethical values. But what does that mean? We find out by looking at the attributes of the principle. For the first principle, these are attribute 1, tone at the top. The tone at the top can be a driver or a barrier of internal controls. The oversight body and management demonstrate the importance of integrity and ethical values through their directives, attitudes, and behavior. The oversight bodies and management's directives, attitudes, and behaviors need to reflect the integrity and ethical values expected throughout the entity. There needs to be a commitment to doing what is right, not just maintaining a minimum level of performance necessary to comply with applicable laws and regulations. Attribute 2, standards of conduct. The management of the organization has to establish standards of conduct that communicate expectations concerning the integrity and ethical values of the staff. The organization should use the ethical values to balance the needs and concerns of different stakeholders and make decisions when there are 2 seemingly right answers. The standards of conduct guide the directives, attitudes, and behaviors of the organization. The oversight body needs to approve, edit, or disapprove these standards of conduct. And attribute 3, adherence to the standards of conduct. The management of the organization must establish processes to evaluate staff performance against the standards of conduct and address any deviations. Evaluations should consist of ongoing evaluations, individual reporting, upward feedback processes, or a whistleblower process. Management must also determine a tolerance level for deviations, which may range from 0 tolerance for certain deviations to verbal warnings for other deviations. The oversight body should ensure adherence to the standards of conduct by the executive director and the executive director's deputies or program directors. As you can see, these 3 slides represent one small piece of the internal controls mandated by the federal government for nonprofit agencies, tribes, coalitions, and government agencies who are receiving funding from the federal government. We're going to drop a link in the chat for the GAO Green Book again so that you can read through all of the components, principles, and attributes that are required. I highly encourage you to do that. But first, we're going to do a couple of exercises to help you understand how to apply these to your own organization. I'm going to pass it over to Suzanne now.
Great. Thank you, Courtney. For those of you who have been to our trainings before, you will not. We are going to reintroduce you to our friend Haven Services. Haven Services is a nonprofit organization that receives FVPSA funding from ACF. Which of the following is true about the Haven Services Board of Directors? I'm going to launch our poll, and please select all options that apply. So, is the Haven Services Board of Directors the oversight body of the organization? Are they responsible for the component of the control environment? Are they the management body of the organization? And are they not responsible for the component of control environment? The control environment is the responsibility of the executive director. What do you think? Okay. Great. People are still answering. Okay, I'm going to end the poll and share the results. Fantastic. Okay, so for those of you who selected the oversight body of the organization, you are correct. In a nonprofit organization, the board of directors is the oversight body of the organization. Those who selected that they are responsible for the component of control environment, you are also correct. The board of directors has joint responsibility for the control environment with the management team, which usually consists of the executive director and their deputies. The management body of the organization. So this is not the role of the board of directors, but is typically the role of the executive director and their deputies or program directors. But in very small nonprofits, the chair of the board may serve in a management role, but the board of directors still remains authority over the chair for the purpose of internal controls. And lastly, not responsible for the component of the control environment. So this, the control environment is the responsibility of both the executive director and the board of directors. Both oversight and management are responsible for maintaining an appropriate control environment. Okay, so now we're going to do a 2-minute reflection, and we have these scattered throughout our training. So each of you come to this webinar today from an agency or organization, and each of you is part of the control environment of your agency or organization, even if you did not know that until just right now. So if you can, pick up a pen or paper or open up a document in your computer, and let's jot down the answers to these prompts as they apply to your agency and your organization. And it's just 2 minutes, which I'll set the timer right now. Hopefully you will find this helpful and not annoying. Oh wait, here we go, sorry. There we go. So just take a few minutes to think about these prompts. The oversight body in my organization or agency is. The management entity in my organization or agency is. What in one way, based on the components, principles, and attributes that we've discussed, that my oversight body and management entity is doing a good job at creating a strong control environment? In what ways, based on the components, principles, and attributes that we've discussed, are the oversight body and management entity in my organization, which ways can they improve on, or which aspects can they improve on? I should also say that throughout these reflections, if there's something you want to add in the chat, if you have a thought or a strategy or a question about these reflections, please don't hesitate. Okay, time's up. Thank you so much if you participated. Well done. At the end of this webinar, you can take these thoughts back to your organization and see if you can improve upon any of them. Now I'm going to pass it back over to Courtney, who's going to talk a little bit more about separations of duty.
Thanks, Suzanne. I hope you all found that helpful. I think that if you think through those things, I think it would help you a lot, help me a lot. The GAO Green Book outlines a lot of information about what needs to happen in an organization for there to be adequate internal controls. But one of the most critical pieces of internal controls that exists is separation of duties. As I stated before, we are going to talk about separation of duties a lot because they are so important. Remember, if you're a pass-through entity, much of your monitoring and risk assessment is going to come down to whether the sub-grantee has appropriate internal controls. The first thing to look at is whether there are adequate separation of duties in your sub-grantee's organization. What can internal controls look like? I am about to provide an optimal framework for separation of duties. Many of you have organizations that are so small that many of these roles overlap to just one or two people. That may be okay, provided that there is more than one set of eyes on every transaction. You may need to adapt these to suit your work. First, the role of the program staff. The program staff is generally where the request for resources generates. This is because program staff often has the best information about what kind of resources the program needs. Money, gift cards, technology, hardware, software, or a memorandum of understanding with another organization. Program staff are often the first line of communication for the public. They may be the folks that collect donations from the public, go to the mailbox, and open the mail to find checks, or accept cash at outreach events, in addition to doing the service work of your agency or organization. The second is the role of the management staff. When there is a management staff, that management staff is often the first line of approval for any request from the program staff. Management staff acts as an internal control on whether the program staff really need the resources that they requested. Management staff have insight and firsthand knowledge into what a program needs as well, and may be in meetings with the management of other programs so that they have a wider view of what the whole organization or agency needs. Management staff can tell you whether this particular request is a good use of the agency's or organization's resources. This is your first internal control. The management staff is the second set of eyes on any request from the program staff. Management staff may also be the entity to which the program staff turns over incoming resources. They should have a system for collecting the incoming resources and turning those over to the financial staff. The third is the role of director level staff. When there is director level staff that is separate from the management staff, that director level staff is often the final approval of the request. They are your third set of eyes, another internal control. Where the management staff looks at the necessity of the resource to the program, the director level staff is going to be looking at the necessity of the resource to the whole organization and agency. They will most often be consulting with the organization or agency's financial staff to ensure that there is sufficient funding to cover the request and that the request is allowable under various restricted funding sources. The director level staff is often the final approval of payments to vendors. The director level staff will likely be the first reviewer of any reports that are generated by the financial staff on a regular basis. Reports for review should be generated monthly, but not less than quarterly. These reports should include all accounts receivable as well as accounts payable. They should include any and all information related to donations, in-kind, goods and materials, cash or cash equivalent that was received in that time period. Optimally, the program and management staff should also be able to view those reports as an internal control. The director level staff makes the ultimate determination of what is good for the agency or organization. You can see that the director level staff is an internal control in lots of situations, but they are also the first set of eyes in others. It is important that the director level staff isn't the last or the only decider in many instances. They are also the subject of internal controls too. Your financial staff is going to ensure that there are adequate resources to pay for any request. They're going to ensure that the expense is allowable under the grant agreement. They are going to record incoming cash and checks and ensure that the income is allocated correctly to the appropriate income sources. They are going to record outgoing expenditures and ensure that they're recorded to the appropriate grants and other customers. Financial staff is also going to prepare financial reports and grant reports. In many small organizations, the financial staff and the director level staff are the same person. This means that it is even more important to have strong policies and procedures providing that internal control for the person in that role. Remember, no matter who the director is or the financial staff is, a strong oversight authority is essential to internal controls. In nonprofit organizations, the oversight authority is likely the board of directors. In tribes, the oversight authority may be the tribal council or the tribal government. In a government agency, it may be the inspector general or your legislature. No matter the structure of the organization or agency, the role of the oversight authority is to review all reports from the financial staff or the director level staff, be a second signer on checks over a certain amount, and hold the director and financial staff accountable to the policies and procedures. Now I'm going to turn it over to my colleague, Laura, for another knowledge check.
All right, thanks, Courtney. We're going to launch another poll here in just a second. So which of these are reasons that separation of duties are important to your organization? Let me go ahead and launch the poll. This is, you can select all that apply. Okay. I'm going to end the poll. So everybody is kind of focused on the first three answers. So if you answered in any of the first three, you are correct. They decrease the risk of mistakes in my organization. They help us to uphold our mission. And they help us to quickly identify when mistakes are made. So you're looking at the top three there around why separation of duties are so important. And yeah, you all did a wonderful job. All right, back to you, Courtney.
Thank you, Laura. Now we're going to talk about the elements of internal controls. Let's start by discussing your grant budget as an element of internal controls. What is your budget? A budget is a projection of what you estimate that you will do with your FVPSA award. A budget, while very important, is only an estimate. There are times when circumstances change and we are unable to meet the expectations that we set when we developed our budget. Or things have changed, which make other items more important than what we put in our budget. Your budget is the proposed plan of expenditures projected from expected sources of revenues. For subgrantees, your budget tells your pass-through entity and ultimately ACF how you are going to serve the victims and survivors in your communities. For pass-through entities, your budget and your success depends on how and whether your subgrantees spend their grants fully and appropriately. It is in your best interest to keep a close eye on subgrantee spending and provide help when you see the need for it. The budget is indicative of sound planning and deliberate decision-making of the organization, but it is not a static document. Reports from your budget detailing what you said you would spend, what you did spend, and what you anticipate that you will spend should be generated and reviewed regularly. Budget reports should be generated by the organization's accounting information system. We're going to talk about that a little bit later, and prepared by the financial staff. They should be reviewed quarterly. They should be reviewed quarterly by the board of directors, if not monthly. Remember, even for small organizations, it is imperative that more than one set of eyes is on your budget report. One person should prepare the report and recommendations, and the second should review the report. The oversight authority of the organization must see the budget reports and reflect on whether the grantee can spend down their award. If you project difficulties with your budget and spending down your award, it's time to talk to your federal program officer and your grant manager about a grant adjustment. The second element of internal controls that we're going to discuss is cash receipts. Cash receipts is an area of internal controls that receives a lot of attention in audits and monitoring visits. So it's important that organizations and agencies have clear and comprehensive policies on how you manage the receipt of cash and checks into your organization. Think about the areas in your organization where there is a possibility of fraud, waste, or abuse. Cash receipts is usually at the top of that list. The purpose of the cash receipts process is to ensure that all revenues are safeguarded, deposited intact, and recorded to their proper account. Different employees should first open and receive the cash and checks and prepare receipts and thank you notes. 2, stamp and/or document the cash and checks were received. 3, log and record the money received. And 4, deposit the checks and cash received. Ensure that different tasks are associated with different positions in your agencies and that those tasks are listed in the financial policies and procedures and attached to the position's job description. Here are a couple of pro tips for you to use to implement adequate internal controls in your organizations around cash receipts. Smaller organizations can consolidate some of these steps or have 2 people complete all 4 tasks. Just make sure that there is more than one set of eyes on each transaction and that there is a good policy for one person to report another person if they see inconsistencies. If you have a small organization, train program staff to make deposits or go to the bank. It can be a rotating schedule. You don't necessarily need staff dedicated to each task. Staff can incorporate some of these tasks as addendums to their typical job description. But make sure that your policies and procedures address each of the steps on the previous slides and are placed into job descriptions for different positions. Anyone who has had an audit will thank me for this. When you receive cash and checks, maybe your grant reimbursement checks, make sure that they are kept in a secure location until you are able to deposit them in a bank. Deposits should be made at least weekly. Never hold a check. Even if you don't know where it comes from or how to code it, make a copy of the check and deposit the check into an authorized bank account for the organization. Figure out where the check should be allocated later. When you are depositing paper checks, use duplicate deposit tickets and make copies of the checks. That ensures that there are copies of what you did, even if someone forgets to record the proper paperwork. And whenever possible, please encourage direct deposit into your accounts by grantors and regular donors. Let's take a minute now and let Suzanne lead us through a knowledge check and a 2-minute reflection.
Hello. So Now let's revisit our friends at the Intertribal Planning Agency, which is a tribal consortium made up of 5 tribes in the surrounding area who work together to coordinate services and outreach. ITPA has a total of 4 employees, 1 director and 4 staff to support their member tribes. I'm going to launch a poll. Please share which of the following are acceptable internal controls for the ITPA. Please select all that apply. Here we go. Okay, I'll give you, all right, so it looks like most people participated. I'm going to end the poll now and share the results. So it looks like everyone agrees pretty much that all of these are good ways for ITPA to modify optimal internal controls for a small agency. Let's go over them really quickly. So ITPA can contract with a part-time financial consultant and prepare financial reports. The ITPA can task one of their member support staff with retrieving and opening the mail while their director logs the money received and deposits the checks. And the ITPA director can prepare the budget reports, and the oversight board can review and approve them. Great job, folks. Okay, let's do another quick reflection. Some of this information about receiving cash is difficult to envision, particularly if you are a small organization or you don't have that many people to handle so many tasks. So again, grab that paper and pen or reopen the document that's on your computer and consider these following prompts and thinking about how you can apply them in your work. Set the timer now for a quick reflection. So if you're a sub-grantee, which of these cash receipt policies are you going to change or implement today to strengthen your internal controls? And if you're a pass-through entity, which of these cash receipt policies are you going to highlight for the sub-grantees to help them strengthen their internal controls?
Suzanne, I think you're muted.
Thanks, Courtney. Okay, time's up. If any questions came up for you during that process, please be sure to put them in the Q&A so that we can address them later. Now I'll turn things over to Courtney so she can discuss a bit about cash disbursements.
Thanks, Suzanne. Like cash receipts, cash disbursement is another area that is often a central focus of audits and monitoring, since it is an easy way for there to be fraud, waste, and abuse in your agency or organization. It is especially important during this round of FVPSA when we have a lot more flexibility with our funds. It is important to establish a standard framework for when cash and checks can be disbursed. There are typically 4 levels of cash disbursement in an organization. Petty cash is a small pot of cash that can be managed in the office and is usually for the purpose of providing quick and accessible funds for something that was not anticipated. These funds can be pay for staff parking or for client food in an emergency. There is typically a low threshold for the amount of petty cash to be held in the office. For example, $50 to $100. Petty cash may be managed by one person who maintains a log of petty cash disbursements and a second person who receives the log on a regular basis to check for accuracy. This is often the finance officer or office manager, reviewed by the deputy director or executive director. The director or the oversight body of the organization should establish a review and approval procedure for someone to access the petty cash. For example, the policy might state that the finance officer cannot distribute petty cash unless there is a signed approval form received from the person requesting the cash. Cash and gift cards for client assistance. Cash and gift cards for client assistance are one of the ways that programs can help their clients with FVPSA funds. Remember that FVPSA requires that assistance be paid to a third-party vendor. Organizations need to establish a policy for that client cash assistance. For example, how much can each client receive? For what can the client receive assistance? When and what hurdles have to be reached before a client can get the client assistance? This policy should establish a process for requesting the funds, usually from a direct service provider, a review of the request, usually by a program director, and a person to ensure that all parts of the policy are in compliance and able to disperse the funds, usually a financial director. Organizations and agencies usually establish policies dependent on a monetary threshold. $2,000 is a common threshold for agencies and organizations, but it does not have to be that particular monetary amount. While the policies and procedures, policies for purchases and expenditures are often the same regardless of the amount of funds to be dispersed, the amount of the funds may dictate how many signers or approvers, if you're using a system like Bill.com, must sign or approve before the check can be honored. The first step is to ensure that all parties followed the procurement policy. Were all required bids collected and properly evaluated? If so, and all approvals were made in accordance with the procurement policy, move to the second step. The second step is to ensure that all expenditures have a confirmed cost center. That is, if you are paying from a grant, is this item allowed? Have you consulted with everyone you have to consult with to ensure that the funds are able to be spent, which may be your federal program officer or your grants manager? The third and final step is for the signers to ensure that the vendor name and address on the check match the name and address on the approved invoice. Make sure the invoice has the actual approvals written on the document. When you are audited, the auditor should be allowed to see clearly who requested that the invoice be paid, who approved the invoice, and who dispersed the payment. As stated previously, a purchase of expenditure over $2,000 often follows the same procedure, but adds another level of review and approval. Remember, the $2,000 threshold is only a recommendation and is a common threshold, but it is not the only threshold. Smaller organizations might want to make it a smaller threshold, $500. Larger organizations might want to make it a higher threshold. Here are some additional tips for check processing. First pro tip, do not have a stash of checks that are signed to facilitate easy access to checks if you need them. Figure out a policy that works for you so that you can access checks quickly, but also while maintaining internal controls. Encourage all of your employees to have direct deposit so that you can avoid the check signing process every 2 weeks, twice a month, or monthly. And never, for any reason, write a check to cash. Now we'll take a break and turn it over to my colleague Laura for a quick knowledge check.
All right, everybody. Time for another quick poll. Get a glass of water if you need something. Take a deep breath. We know this is a lot of dense information, so we appreciate you hanging in there with us as we go through this information today. So here's our next knowledge check. If one of my clients needs cash assistance to pay for rent, what does FVPSA allow me to do? Let me go ahead. If one of my clients needs cash assistance to pay for rent, what does FVPSA allow me to do? Provide a check made out to the client's landlord, provided that one party requests the check and a second party signs the check. Hand the client cash, provided that you note the amount of the cash in the petty cash disbursement. Pull one of the pre-signed checks from the safe and make the check out to the client. Leave this open for a minute here. Okay. We're still answering. All right. I think we're good. I'm going to end the poll. Looks like the majority of you went with the first answer, and that is correct. So excellent job, everyone. The correct answer is provide a check made out to the client's landlord, provided that one party requests the check and the second party has signed the check. All right. Good job, everybody. Back to you, Courtney.
Thanks, Laura. Next, bank reconciliations. Bank reconciliations are a key element of internal control because it helps the agency or organization keep track of disbursements and receipts. This is the same as balancing your personal checking account. If you spend $50 on gas when you're in a rush but forget to log that into your ledger, your reconciliation helps you to remember. Or if your partner spends that money on gas and forgets to tell you, the reconciliation shows you what money came out of your account and from where it came. Bank reconciliations in an organization are intended to ensure that all bank accounts are accurate and that the accounting records match the financial statements of the organization. This is an important point for any auditor. Organizations and agencies have to make sure that they are reconciling to the general ledger and not just the amount in the checking account. This is where business reconciliation is a bit different from your own personal checking account. The good news is that most financial software has a module that does a lot of the reconciliation for you. Organizations and agencies should check their software and make sure that they have that module and that they know how to use the reconciliation module. Best practices is to complete the organization's reconciliation within 10 days of receipt of the monthly bank statement. This will help you catch abnormalities quickly after they happen. As with everything else, separation of duties is going to be essential to your reconciliation process. There needs to be at least 2 people involved in this reconciliation process. Organizations and agencies need to ensure that one person prepares the reconciliation, Usually the financial officer, and another person reviews and approves the reconciliation. Usually the executive director or the board treasurer, but preferably both. Most agencies and organizations keep a very close eye on their receivables. I know I did when I was managing a nonprofit. This tells you whether you've received the grant reimbursements that you plan to receive after you've submitted your financial reports. Accurate and regular financial reporting, as well as drawing down your funds from the federal government at the end of each quarter, are important elements of internal controls and are very helpful at helping you managing your cash flow. Every organization and agency needs to establish a policy to review the receivables monthly, making sure that you are getting grant reimbursements in a timely manner. If you are not, contact the PMS help desk as soon as possible to figure out where your reimbursement may be. Reviewing your accounts receivable is a job where you may engage your oversight authority, your board of directors, or your tribal council to ensure that your receivables are accurate and that you are receiving funds when you should be. If there are any receivables over 30 days old, that oversight authority may be able to help you get those receivables paid. The financial report that you create with your accounting software will show which receivables are aging when they should not be. Payroll and timekeeping is one of the most essential elements of internal controls and is critical to the good management of any grant. It is also something that is guaranteed to be audited by grant managers as well as internal auditors. All employees are required to have an offer letter and/or contract which explicitly states the amount of money that they will be paid, the cost center breakdown of their salary, from which accounts from which they will be paid and in what increments, when they will be paid, and their overall expected hours. Auditors will look for an employee's offer letter or contract when they do your annual audit, and they will look for these elements in that offer letter or contract. They are then going to match these elements to the employee's timesheets and the employee's payroll. All employees must complete a timesheet that reflects their actual time worked and what is completed. Employees are responsible for ensuring that their responsibilities and their actual time worked match the grant allocations. If the employee finds that their responsibilities do not match how they are allocated to the grant, the employee needs to discuss this with their supervisor as soon as possible. If necessary, the organization or agency should request a grant adjustment to ensure that their staff is working on the grant in the same proportion that the agency or organization is billing the grant. All employee timesheets have to be submitted no later than 48 hours after the pay period ends and signed by the employee. All signed employee timesheets should be transmitted to the employee's supervisor for review and approval or modification. The employee supervisor should approve all employee timesheets and submit them to the fiscal officer no later than 24 to 48 hours after received by the employee. The supervisor is responsible for ensuring that the employee's recorded time is accurate. The supervisor is also responsible for ensuring that the employee is allocating their time in accordance with their grant responsibilities. Another pro tip for you: if the employee's timesheet does not reflect the grant, what the employee is supposed to be doing on the grant, the supervisor should help the employee to redistribute their work responsibilities or work with the grant manager on a grant adjustment so that the employee's time matches the employee's grant allocation. Timesheets must be made available to grant funders upon request. I can almost promise that regular monitoring, site visits, and audits will include a review of timesheets, including all of the elements that we just mentioned. Now we're going to take a minute to make sure you understand this information with some knowledge checks and reflections. Back to you, Suzanne.
Thanks, Courtney. So we are going to launch a poll. You are a supervisor and you notice that an employee's timesheet does not reflect the cost center allocations that are reflected in the employee's offer letter. What do you do? Let's see. Please select all that apply. Okay, I'll just do another couple seconds. All right, fabulous. Let's share results. Okay, if you answered the last two options and you are correct, you should meet with the employee to determine if their timesheet is an accurate reflection of the time worked, and schedule a meeting with the grant manager to request a grant adjustment. Okay, great job. Looks like folks pretty much understand that concept. So I'm going to move it back. Oh, sorry, we have a 2-minute reflection. So again, this is a lot of information. We wanted to take a moment to think about what and how this might apply in your work. So payroll and timesheets are often the most troublesome areas for grantees, and they are audited often, as Courtney mentioned. As a sub-grantee, your timesheets will certainly be audited, and as a pass-through entity, you will audit your sub-grantees' timesheets, and you will be audited by ACF for ensuring compliance with timesheets and payroll. We can't think enough about timesheets and how they work in practice. So again, grab your paper and pen or reopen that document on your computer and consider this. If you're a grantee, either a pass-through entity or a sub-grantee, consider how your organization and agency ensures the following. That timesheets are an accurate reflection of the actual time worked, that timesheets are a reflection that are reflecting the cost center or grant for which the employee is working, that the employee's time actually matches the amount of time that was specified in the grant for the employee to be working, and that the supervisor of the employee is reviewing and signing the timesheets. Looks like my timer, oh, here it is, okay. I'll set the timer, just giving you a couple of minutes to think about some or all of these questions. Okay, time's up. If you're unable to clearly answer any of those questions, you may want to consider drafting new policies and procedures for your agency and organization that ensures these things are happening. Also, I just want to flag the comment that Laura just put in the chat. If you were thrilled to as in reflecting on your organization, thrilled about the policies and procedures and strategies you're using that seem to be completely in line with the internal controls framework that Courtney's discussing, please share some of those strategies and policies that you're using for folks in this training and beyond to learn from. Now I'll pass it back to Courtney for some more on internal controls.
Thanks, Suzanne. Let's talk about procurement policies. Procurement policies are intended to ensure that everything purchased with organization funds are A, within the boundaries of the programs and or grant allowances, and B, the most efficient use of the organization's resources. And I'm sure you know this by now, but procurement policies also require separation of duties. Any staff member should be able to request a purchase within your organization. whether it is address labels or a vehicle for driving your shelter clients to the grocery store. But there has to be at least one other person to review funding capacity, including the boundaries of the grant you intend to use to pay for the expense and management of the bid collection process for large expenses. This is typically the person that manages your finances. Once we've determined that there is enough money and that the grant will allow the cost, and that we've followed the procurement process, there should be a person that makes the final approval of the purchase and submission of the purchase order to the vendor. Depending on the size and scope of your agency or organization, this may be the finance officer, the program director, the executive director, or the oversight body. After the purchase is complete, the receipt of the purchase order invoices should be transmitted back to the organization or agency to check the invoice against the receiving report, prepare the check, and submit the check in accordance with the organization or agency's financial policies. Any property or equipment that is purchased by the organization should be recorded as an asset and maintained through an inventory system that the agency or organization develops. This does not have to be as scary as it sounds. An organization can use a simple spreadsheet with the names of property and equipment, corresponding that with an internal number that you give the equipment or the property. You can then put simple address labels on the property to keep track of it. This is useful for any office furniture, laptops, computer accessories, or other tangible equipment. In addition to making sure that property or equipment is inventoried, the agency or organization must develop a process for depreciating the asset as it ages. And when the property or equipment is obsolete and no longer in use, there needs to be a process for removing the property or equipment from the organization's accounting records. Because depreciation and removal can be complicated, it is recommended that agencies or organizations retain the services of a certified public accountant with nonprofit and federal grants management experience to establish these policies and procedures. Note: the depreciation and removal of property and the depreciation and removal of equipment from use at an agency are different. Be sure to consult the 45 CFR 75 subpart E for specific information about how to depreciate and remove property versus equipment. Be sure that the accountant engaged by the agency or organization also consults the CFR before establishing these policies. One commonly used best practice is to schedule an annual office cleanup day where you physically identify and inventory all furniture, technology, and fixtures within your agency or organization. Determine if the property or equipment is useful and work with your accountant to reconcile the property or equipment to your accounting records. If you determine that furniture, technology, equipment, or fixtures that were purchased with grant funds cannot be found, be sure to notify your grants management specialist and federal program officer as soon as possible. We all know that before you waded into the world of federal grants, your organization or agency may have maintained your federal records on a handy Excel spreadsheet. I have spreadsheets for everything. I love them myself, so I know how helpful they are and I know how easy they are to manage. But now that you have federal grant money, it is really important that you upgrade your accounting information system to be a little bit more sophisticated. Some things to consider when considering the purchase of your new software. First, your new accounting system should maintain a double entry bookkeeping system composed of a general ledger and journals of original entry. Second, your new accounting system must be able to segregate income and expenditures by cost center, also known as your grants. Your new accounting system must be able to maintain revenues and expenditures on an accrual system. And your new accounting system must be able to ensure that your data is backed up at least weekly and is working properly at all times. If you already have an accounting system, that's okay. Most of the mainstream accounting information systems on the market have the capability to do all of these things. Take a couple of minutes to check that you're actually using the functions that you need on your systems. While an accounting information system seems unwieldy and stressful, it actually can make your financial and grants management life much easier in the long run. Financial reports are one of those ways. Bank reconciliations, aging receivables, ensuring disbursements and cash receipts are accurate, can easily be managed in a few minutes with your new accounting information system. Just make sure to create a policy and a procedure for how these reports are generated and reviewed at least monthly. As with everything else we've discussed today, financial reports require more than one set of eyes. There should be one person that prepares the report monthly, a second person to do a first review of the report, usually director level staff, and a third party to approve the report, usually an organization's treasurer or their oversight authority. One tip that I've always found very helpful is to involve your program director staff in reviewing financial reports. Some directors and oversight authority fear having their staff read the financial reports. I've never understood that because they can be very helpful in picking up details that an executive director or a finance officer may not see. They know what their program has purchased or has spent. Give them an opportunity to review the reports and check for inaccuracies. And this may seem simple, but trust me, it's not. Make sure to train your staff and oversight authority on how to read financial reports. Financial reports look intimidating, but anyone can be taught to read them. Take the time to educate your staff and oversight authority on what they are looking at. The pandemic forced all of us to get our services online as fast as possible. With this has come a lot of concern about who may have access to those records now that they are on the cloud or even on our organization or agency's internal server. Each agency or organization should take a good look at the protections that are baked into their databases and information systems, and establish policies and procedures for who has access to what kinds of record. Financial staff should have access to financial records. Client services staff should have access to client records. Is it really important for your oversight authority or your directors to be able to see client records? Consider that question closely. When you have access to those records, is it just in the office or can you access these records from anywhere? Where they have access. Is it just in the office or are you requiring that staff only access agency records from an agency issued laptop? Do they need to connect to a VPN to get to the records? And what kind of access do they have? Can staff create new data? Can they delete data? Can they edit data? Or are they permitted only to view data? At an absolute minimum, every staff member, volunteer, or member of an oversight authority should have a unique login and a password to access any record of your agency. But policies and procedures should go way past that to adequately protect your records and ensure appropriate internal controls. Laura, this is a ton of information. Let's walk through some knowledge checks and reflections to see where we are.
All right, folks. Thanks, Courtney. We've got a quick poll and another reflection as we make our way through this training today. So which of the following capabilities are required of your accounting software? Which of the following are required of your accounting software? Not what I wanted. This is our last poll, so I'm going to go ahead and launch it. Segregation of income and disbursements by cost center, running financial reports, password protection with access authorized only for certain users, regular backing up of data, and you can check all that apply. All right, we're making our way through here. I'm gonna, oh, no, folks are still answering. Okay, I'm going to end the poll here in a second and share the results. It is all four are required to follow for your accounting software. So good job, everybody. We're going to do another 2-minute reflection. Let me close out the poll. Now that we are either all online or heading towards online, it is likely that our records are too. Gone are the days when we had to worry about a key to a filing cabinet that was stashed in a supervisor's office. We now have to worry about who has access to our system, which firewalls are in place to safeguard against hackers and data breaches, and whether our clients' data is being adequately safeguarded. If you are a sub-grantee, jot down 3 protections that your agency or organization has to protect your clients' data and your financial data. This may be a new firewall, a server housed on a site, the use of a VPN, password protected databases or computers or both, or old-fashioned filing cabinets that are locked. Now name 3 protections that you can improve upon to ensure that your client's data and your financial data remain safe. If you're a pass-through entity, jot down 3 concrete points that you commit to looking for when you do a site visit and monitoring regarding protection of records. How do you plan to provide technical assistance to your sub-grantees around those 3 concrete points before holding your sub-grantees accountable to them? So we'll go ahead and start the timer. Thanks, Suzanne. Again, please feel free to share in the chat your reflections if you would like to. You certainly don't have to, but if there's things that have worked for your organization that you want to share, especially in the last couple of years as a result of maybe moving virtually or bringing on some of these software pieces, please feel free to peer share in the chat. If you have questions about these things, you can go ahead and pop those into the Q&A function. Okay, time's up. As always, if this reflection brought up any questions for you, please feel free to pop those into the Q&A. And remember, we are doing another FAQ that we'll release as soon as we can if there are questions we can't get to. Handing it back over to Courtney as we roll through this training. We're getting close to the end.
Thanks, Laura. Let's talk a little bit about some concrete steps you can take to make internal controls work for your grant. One easy way that you can make sure that you have separation of duties on your grant is to make sure that your grant staff are different, even in a small organization. I hope we can find 3 different people to be the authorized official, the project director, and the financial director. In a pinch, you can use 2 different people, but remember the principle of separation of duties. We need more than 1 set of eyes, always. Separation of duties applies to our reporting as well. 2 sets of eyes, always. 1 staff member should prepare the reports. This can be the same staff member for programmatic and for financial, or it can be different. Another staff member should review the reports for accuracy and submit them. In large organizations, this may be 2 completely different sets of people. In small organizations, it may only be 2 people. Either way, we need 2 sets of eyes on reports and a whistleblower or other type of policy to ensure that inaccuracies and inconsistencies can be reported without fear of retaliation. Especially with the addition of flexibility that comes with ARP funds, many organizations will be purchasing property and equipment. Once purchased, that property and equipment has to be properly maintained, especially if you are using grant funds for any part of the purchase. Here are some ways that you can make this work. Ensure that all property is purchased using the procurement policy of your organization. Ensure that all property intended for reimbursement by the grant is authorized by the grant before you purchase it. Some property, vehicle purchases, for example, require pre-approval. Make sure you are getting pre-approval for those large purchases before you make the purchase. Ensure that all property purchased by the grant is marked as purchased by the grant, is being used for its intended purpose, and is easily accessible for the grant manager to see and review. We talked about this earlier, but you can honestly use common address labels with grant information and stick it to the property. This includes laptops, printers, headphones, cell phones, etc. Just stick it right on the property. All of this information about internal controls is not just theoretical, and it's not just designed to make your life more complicated. Internal controls can actually help you maintain control of your grant. One of the ways that internal controls can do that is through quarterly reflections on the way that you have said that you are going to use your grant and how you have actually used your grant. Do they match? Do you need to discuss a grant adjustment with your grant manager? Grant money doesn't help us unless we actually spend the grant money. If you are a pass-through entity, one of your primary responsibilities is making sure that your subgrantees are spending down their grant. Help your subgrantees reflect on where they are and what they can do to make sure the money is spent down efficiently and accurately. Now it's time for some closing reflections with Suzanne. Remember, if any questions arise for you, put them in the Q&A. The Office of Grants Management is here right now to answer your questions. But if they can't do it today, we will address them later. Take it away, Suzanne.
All right, thank you so much, Courtney. So let's just take a few minutes to spend down your grant award with the budget and spending plan that you've submitted. So let's think about that. Pick up a pen and pencil, or pen, paper, pencil, whatever you've been using, and reflect on the grant budget and how have you realistically been spending down your grant. What are the individual challenges or concerns that each of you have with regard to actually and realistically spending down your award? Do you believe that you can realistically spend your award? If the answer to this is no, then think about what you can spend down your grant on and what else you need to make these alternative solutions happen. And if you're a pass-through entity, how are you helping your subgrantees manage their budgets or manage their budgets to actuals? If you know that your jurisdiction needs a lot of training, you can organize the training for your subgrantees and take the administrative burden off their shoulders. I'm going to set the timer for you to reflect on these questions. Okay, time's up. So before we go, let's just take a quick minute to make commitments to ourselves and our subgrantees. In the chat, if you could, and it doesn't have to be the number suggested, but if you could name 3 or less, however, new things from this webinar that you will change or implement within the next 30 days, please share. And name 2 things that you plan on discussing with your oversight entity or management. And as a result of this webinar, if you can think of 1 thing that you might stop doing, please share as well in the chat. We'd love to hear how this information is informing your work moving forward, as well as we look forward to hearing what else you need to effectively implement your FVPSA grant. Okay, so it looks like folks are sharing that management of timesheets and percentages for employees is something that they will be thinking about, reviewing our fiscal policies and using this info as a checklist. That's wonderful to hear. Timesheet management. Yes, yes. As Courtney had mentioned, it's one that's often audited and one that's sometimes hard to get a hold of. Great to hear good feedback. Oh, the office annual cleanup day. Okay, ensuring that subgrantees get copies of our fiscal and management policies. Well, we're so happy that some of these strategies are ones that you're finding useful and that you have a plan moving forward on how to implement it in your work. Please share in the chat. Please continue to share this information in the chat because it will inform the technical assistance and training that we provide moving forward. So with that, I'm going to pass it over to Laura to close out this training and share with you the resources, guides, and grants management tools that are available to you and are at your fingertips, whether you know it or not. So Laura, take it away.
All right, thanks, Suzanne. So as we wrap things up, I'm going to go ahead and put the post-training survey into the chat. If you could kindly start filling that out and listen to the resources at the same time, that would be fantastic. I see some things in the chat that I'm going to address in just a second about if you missed any of our previous recordings. So we're not going to leave you empty-handed today. This was, again, all of our modules have been a lot of information to process, and today was no different. So we will be sharing the recording of this training in English and Spanish as soon as we can, and we encourage you to share it with colleagues who may not have been able to attend. We also encourage you to share this with your subgrantees. We have several documents that we will share in the chat that will be helpful for you as you manage your ARP funds. We will also send the links to these documents in our post-training communication. Back in, I believe, the middle of May, FVPSA launched a comprehensive online resource center for all FVPSA ARP grantees. The website includes essential resources, including FAQs, new initiatives, all FVPSA ARP related items, program instruction memos, success stories, podcasts, and other resources to help states, territories, tribes, coalitions, resource centers, and hotlines provide services. This website also includes information about these financial grants management training. You will, so if you missed training, that's okay. If you want to go to the next slide, Suzanne. This is the FVPSA ARP Learning Portal is a part of the website that we just showed you. So you can see here that you are able to see modules 1 and modules 2. They are uploaded in both English and Spanish. The slides are there. FAQ for module 2 is coming very soon. And so this is the space. So if you've missed something or you want to make a referral for the training, for if there's new hires or there's turnover, you can always come back to these resources. Courtney, I believe, is plopping some of these links into the chat for you as well. So also as part of the FVPSA ARP Learning Portal is the Grantee Resource Kit. So you will see on the Learning Portal, there's a link for the kit, and so where you'll find all kinds of information. So we want to make sure that you take advantage of all of these resources that are in one place. You have heard us talk a lot about the importance of obligating and drawing down your funds through this training series. Courtney mentioned the payment management system, I believe earlier in the training. You are doing such important work and you know firsthand how important this funding is to survivors and the organizations you serve. Your FPO and grants management officer are here to support you in navigating any barriers that prevent you from drawing down your funds in a timely manner. The payment management system, or PMS, offers a range of training and resources to help you with the process of drawing down funds and submitting your federal financial report. So you can see all of these resources and links are available to you as well. And we'll go out with our communication and are also available on the FVPSA website. Also on the FVPSA website is a list of your contact information for FVPSA. So please take note of the FVPSA program officer. Again, they're here to support you, and I encourage you to reach out and build a relationship with them if you haven't already. Relationships are essential for FPOs to understanding your successes and challenges. It is more stressful to relate a crisis or immediate concern to a stranger than to share it with someone with whom you have an established relationship with. So again, if you go to the FVPSA learning portal and to the website, you will see all of this information about how to get in touch with your federal project officer.
So with that, thank you everybody for participating. And again, we are here for you. Please reach out if you have questions, and please access our learning portal where you'll find all the information that's coming regularly on resources and tools to support your work. Thanks again.